This is episode 5. And in today's episode, we're going to talk about your worst fear when it comes to dealing with the IRS. No, not the fear of going to jail. We're going to talk about the IRS coming and taking your money out of your bank account. Today's episode is about tax levies. What is a tax levy? In this episode, I'm going to tell you what a tax levy is. We're going to talk about the journey, how we got here, because it doesn't happen overnight. And then I'm going to answer a question that I'm always asked. Can you handle this tax situation yourself? So make sure you stay to the end because I'm going to share with you some things you need to consider when you're looking at whether or not you can handle this tax situation yourself. Okay? So, a tax levy. It sounds scary. It is scary. A tax levy is a legal seizure of your property to satisfy a debt. So when you hear all of the social media gurus telling you, well, the IRS can't legally come in and take your property, I'm sorry, they're wrong. The IRS can and they will. Now, they are not in the business of making your life miserable, but they will. But like I mentioned earlier, a tax levy doesn't happen overnight. So let's talk about how that happens. You guys know I have my notes here because I get excited about taxes. I want to make sure I stay on topic, okay? There are 5 things that have to happen before a levy is actually issued. And let me just go back a little bit and clarify. So, a tax levy is legal seizure of your property to satisfy a debt. Your property can be money, your property can be a home, your property can be a car, it can be a boat. You can have anything attached to your name other than your family taken from you to satisfy a debt to the IRS. So I've had people come and say, well, I'm close to retirement. I only have retirement income. I feel for you. The IRS doesn't. They can take up to 80% of your Social Security check before it even reaches your bank account if you have not made arrangements to satisfy the debt. If you own a boat, they can come and take your boat, sell it, and then they'll take the proceeds of the sale to satisfy the debt. A tax levy is the worst situation that you want to be in. So, I need for you to make a decision right now. I need for you to decide, is enough enough? Because I can give you all the information in the world, but if you don't decide to move forward and let's actually handle this tax levy, you're going to be in the same position and you're just going to be watching and waiting for the money in your account to disappear. So let's talk about these 5 things that have to happen before the IRS can come in and levy your assets. Number 1, the tax must be assessed. So they have to let you know how much you actually owe them. But you should know this from when you filed your tax return. You'll see whether you are getting a refund or whether you have a balance due. Once this tax is assessed, they send out a demand for payment. They will give you a date that the tax has to be paid by. If it's not paid by this date, you will start to accrue interest on that balance. I hate paying interest to anybody. You probably do too if you're looking at how the interest is building up on this balance you have right now. But not only is there interest, you're now looking at failure to pay penalties. The longer you wait to pay off the IRS, not only are you looking at failure to pay penalties. If you didn't file this on time, we're also looking at failure to file penalties. So all of these things must be assessed. They're going to be broken out in the demand for payment. All right. So it has to be assessed. A demand for payment has to be sent out. The next thing that happens is on you. You've either neglected or refused to pay the amount that the IRS has sent out to you. Now you may say, oh, I got a letter, but I didn't know. Well, guess what? You got the letter, so that's neglect. And you might say, hey, I got the letter, but I just can't pay it. If you didn't call them to let them know, that's refusing to pay it. The IRS is just like any other organization. Let's think about it in terms of a relationship. If you don't communicate with somebody and let them know what's going on, chances are they're not going to be willing to work with you too well. And everything that comes out of your mouth is going to seem like an excuse. The IRS is the same way. If you truly are in a situation where you can't pay that, that needs to be communicated to them as soon as possible to attempt to avoid this levy. But I'm going to get to that later. So right now we're at assess, demand for payment. The third thing that has to happen, you neglected or refused to pay it. Number 4, you get a nasty letter. The nasty letter is their intent to levy. Now, because of the Taxpayer Bill of Rights, there's a certain protocol that the IRS has to follow before they just dip into your bank account. Not only are you getting the demand for payment, they give you the notice that lets you know, hey, you owe us, you're refusing to pay, we're looking for your assets to take. Now, you usually have about 30 days to respond to this. The pray and wait method does not work. When you get the notice of intent to levy, you have some options here, okay? You can file what is called an appeal. It's a collection due process appeal. What happens with that, you get the opportunity to present your case as to why a levy is not the best case scenario for you or the IRS. Now keep in mind, you owe them, right? All they want is their money. Think about how expensive it is to send you notice after notice after notice. Then they have to find your bank account. Then they have to go through more paperwork to have this money withdrawn from your account. If you come to them first and set up an arrangement, we can have this whole situation bypassed, potentially. It depends on how far down you are on the naughty list. But you want to make sure you keep those lines of communication open so they know what's going on with you financially, so that this does not put you in a financial hardship to where you can't keep living and earning money. All right? So the tax has been assessed, a demand for payment's been sent, you have neglected or refused to pay it, this notice has been sent out. The next thing they do before the levy is actually issued, they send out what's called an advance notification of third-party contact. This means the IRS is reaching out to, and this is within their right, they can reach out to your employer, because guess what? They may think, that money may never reach that bank account, but we can intercept it if we talk to their employer. And what they'll send your employer is something called a lock-in letter. And the employer has to fill this out and lets them know how your W-4 is filled out. So they'll know if you file as married filing jointly, if you have children on the W-4. And when they send in that lock-in letter, the IRS tells your employer how much of your money to take out of your paycheck to send to them. Now, let's think about it. If you owe somebody money, would you rather control your own cash flow and figure out how much you want to pay each month? Or would you rather them come in and just take it themselves? I'll give you a hint. You don't want them to come in and take it themselves. 80% of your check. So you may be thinking, let's say you made $100 this week. And that's just to keep numbers easy. But you made $100 this week. The IRS can come in and take up to 80% of that, all right, to go to back taxes. So that leaves you with $20. So you're like, what am I going to do with $20? Well, I don't know, because you don't even have $20 left. Because check this out. If you live in the Commonwealth like me, I'm in Louisville, Kentucky. 2.2% of that is going to the city. All right. So that's another $2.20. You're down to like 17 bucks. 5% of that Kentucky just took. 7.65 just went to Social Security and Medicare. So how much do you really have? Exactly. You don't want the IRS to dictate how your money is spent. So, how can we stop this process? How can we reasonably satisfy the IRS so they don't take your money when they want to, and you can still do something that won't leave you with $2 every paycheck, right? The way that we stop a levy, of course, the first thing the IRS is going to want you to do is make a payment in full. All right? If you could make a payment in full, you probably would have already done that. So let's be realistic. The IRS will work with you if you keep those lines of communication open. We need to set up a payment arrangement with the IRS so this debt can be satisfied. Because remember, they are doing the seizure to satisfy the debt. And if they're already at this point, they've had to chase you. So I'm just going to be straightforward with you. Right at this point, this is all your fault. So again, I need you to decide, are we going to take care of this today? Are we going to get on the right path now? Or are you going to still keep praying and waiting? Are you going to keep looking at this stack of IRS letters and just watching the bank account to see if the money is going to come out? Are you waiting for your Social Security check each month, wondering if it's going to be smaller? Don't put yourself in that position. Look, back taxes don't have to, and they shouldn't ruin your life. But if you don't make the choice to take care of it, they absolutely will. So with this payment agreement, what happens is you let the IRS know, depending on how much the debt is, what you can afford to pay each month. Now, if the debt is under $50,000, you do not have to turn in any financial information if you can get it paid off within 36 months or 72 months. Unless, there's always an unless, we are close to the CSED. So the CSED is your collection statute expiration date. This is the last date that the IRS has to collect on that specific amount. The IRS is going to protect their interest. So they are going to want this debt paid off before that collection statute expiration date comes. If you can do that, the IRS will work with you. But you may be thinking, it's over $50,000. I can't afford that. You still have options, all right? You can do what's called a partial pay installment agreement. This is where the IRS looks at your living expenses and what you can afford to pay, and you're going to pay in those smaller amounts until you can pay more, or until the collection statute expiration date expires, whichever comes first. You're thinking that sounds pretty good. How do I make sure I have everything? Well, I'm glad you asked. If you go to americasfavoriteea.com, I have already created a checklist for you. It is the back tax negotiation checklist. Sorry, had a brain fart there. But with the back tax negotiation checklist, it is just that. It's not going to walk you through the steps, but it gives you a checklist of everything that you need before you begin negotiating with the IRS. So it'll have things like your transcripts. You need all your tax returns filed. It will tell you what forms to have filled out to figure out what you can afford to pay per the IRS. Because believe me, your definition of broke and the IRS definition of broke are not the same thing. And when you use this checklist, you can get a good idea of what the IRS will let you do each month. But here's the question that I get asked. I think it's safe to say on average every day. Timalyn, can I handle this IRS problem alone. I love what I do with tax work, but I eat, breathe, and sleep it. I can't be a fair judge of your competency of tax situations. Now, hear me out. When I was younger, I used to want to be a chemist, right? So I understand certain things about chemistry. I understand certain chemistry compounds. But if we needed something created to, let's say, cure a disease, I know about chemistry compounds. I can put things together, but I would not be the best person to create that medication to cure the disease. You may very well understand the 1040. You may very well understand where the W-2 goes on that 1040. But that does not necessarily mean that you are the best person to handle the tax relief portion. That's a completely different part of the tax law. So some things I want you to take into consideration are, if I could have fixed this problem, would I have fixed it already? Okay? And be honest with yourself. If you're sitting there with a stack of envelopes right now, let's just think about what the honest answer is there. Now, I understand sometimes we get stuck in paralysis analysis. If you have a tax debt under $10,000, you can pay it off in 36 months. By gee golly, you most absolutely can handle this yourself. And I'm going to send you right back to the website. If you go to americasfavoriteea.com, you can get the ebook, Guaranteed Payment Plan. It will walk you through step by step how to set it up online or who to call and set that payment plan up. I have a client that was a farmer. She bought the book, set it up in 20 minutes, said thank you, I got it all behind me. So in that type of situation where the tax, you only need a Band-Aid, like I said, by gee golly, you go ahead and take care of it. But if it's a little more serious, you can't get this paid off in 36, 72 months, you may want to consider calling in a professional. That is exactly what I do over at Bowens Tax Solutions. We step into the shoes of taxpayers literally every day to make those negotiations with the IRS to see what they reasonably can afford to pay. And there's even a discovery call on the website. It's going to be in the show notes because, you don't want the IRS to take your money. I don't want that for you either. So there's the discovery call so we can see if I can even help with your problem, if you're going to be a good fit. And if you are, then we'll go along that process to see how I can help you with that. Now, I'm going to get off my soapbox. You all know I'm passionate about helping you with these tax problems, but if I could leave you with one final thing, you control the narrative to this situation. You do not have to wait until the IRS comes and cleans out your account. You can take action today to stop that process. So what are you going to do about it? I want you to reach out to me. You'll see here in the show notes, there's going to be a space where it says contact us. I want to hear about the steps that you plan on taking to get this tax debt behind you. Because again, back taxes, they shouldn't ruin your life. But until next time, I'm America's favorite EA, and I am here to fill the tax literacy gap, one taxpayer at a time.